Good morning, traders, and welcome to BCR's morning market analysis. There's been some big moves in the market, so let's dive into the latest movements across the dollar index, crude oil, and the Australian dollar. First up, let's have a look at the US dollar, which extended its rebound on Wednesday, rising to a high of 99.95, building on Tuesday's 0.4% gain. The markets reacted to the latest FOMC minutes, which showed policymakers taking a cautious wait-and-see approach amid rising risks to inflation and unemployment. The Fed last time left rates unchanged, citing uncertainty from recent government actions and ongoing trade tensions. The dollar also drew some strength from reports that the Japanese authorities may intervene to stabilize their bond market, sending the yen lower. Despite this rebound, the dollar remains close to its April 2023 lows and is down over 7% year to date. Technically, the index is attempting to recover from a 2-week downtrend. Key resistance lies at 100.17 and 100.58, while immediate support is seen at 99.46 and 99.4. A break below that could expose the 99 round number and the 98.69 yearly low. Next, let's have a look at WTI crude oil, which bounced back to $62 per barrel on Wednesday after a sharp drop on the previous day. The recovery was fueled by rising geopolitical tensions, particularly the US signaling possible new sanctions on Russia following stalled peace talks with Ukraine. In addition to that, the US banned Chevron from exporting Venezuelan crude, increasing reliance on Middle Eastern supply. The markets are now awaiting Saturday's OPEC meeting, where a modest production increase of 411,000 barrels per day is expected. If OPEC continues with gradual hikes and the US-Iran tensions ease, upside momentum in oil may be capped. On the charts, WTI remains supported above the $60 psychological level. A breakout above 62.32 could pave the way towards 63.48, while a failure to hold $60 risks a drop towards 58.5 and the April 10th low of 58.37. Next up, let's have a look at gold, which was holding steady around $3,300 until this morning. It took a little hit after the federal courts in the US ruled that Trump does not have authority to put sweeping tariffs, which took it down to $3,260. The central bank also highlighted some elevated risks and labor market uncertainty while continuing to hold rates steady. Although the economy remains solid, the Fed warned of possible downgrades to growth forecasts. Gold is up 26% this year, supported by safe haven demand and strong central bank buying. Goldman Sachs continues with its bullish stance, recommending increased gold allocations amid rising global risks. Technically, gold is consolidating in a wide range with key support around 32.58 and 32.45, which was the high from April the 11th. Immediate resistance stands at 33.40, followed by 33.65, which was last week's high, with a next major target being $3,400. Lastly, let's have a look at the Australian dollar, which fell to a low of 64.10 on Wednesday, despite slightly stronger than expected April CPI of 2.4%, which was expected to come out as 2.3%. The RBA's dovish tone continues to weigh on the currency after last week's rate cut and guidance for more easing. Markets are now pricing in a 65% chance of another cut in July, with cumulative cuts expected in 2026. Meanwhile, broad US dollar strength fueled by improving sentiment and rate differentials is keeping the Australian dollar under pressure. Technically, it remains within an ascending channel, but short-term momentum has weakened after slipping below the 9-day SMA at 6.442. Resistance is also seen at 6.442 and 6.495 and 6.537, which was the 6-month high. On the downside, key support lies at the psychological level of 64 cents, with further weakness potentially targeting 63.66, which is the 40-day SMA. Well, that's all from me today for this morning market update. Stay tuned, manage your risk, and as always, trade smart.